There are a lot of mutual funds out there in the markets, but FoFs or fund of funds are quite different from others when it comes to mutual funds. In today's video, I'm going to talk about that. I'm Neha Vashish from ET Markets. Let's start with the basics. Fund of funds is a type of mutual fund scheme that invests in other mutual fund schemes. That simply means that instead of holding a portfolio of equities or bonds, the fund manager of FoF holds the portfolio of other mutual funds. The main aim of this is to allow investors to benefit from the tool of diversification. A fund of fund can be overseas as well as domestic in nature. Fund of funds are perfect for small investors who cannot take on a high degree of risk. According to Angel One, investors who want to invest for a medium term can park small amount of money every month in fund of funds. Now let's take a look at types of fund of funds. Number one is gold FOFs. These funds invest in multiple different forms of gold through the basket of mutual funds. Number two, multi-manager fund of funds. These funds invest in a basket of professionally managed mutual funds that are combined to form a single investment portfolio. On number three, we have asset allocation fund of funds. In this, investments are done into a variety of asset classes such as commodities, metals, equity-oriented and debt-oriented mutual funds. Number four, international fund of funds. In these funds, international mutual fund schemes with shares or bonds in global companies are considered. Now let's take a look at pros and cons of FOFs. Let's start with the pros. You get diversification of sectors and companies, and you also get professional fund management services. And if we talk about cons, then there are tax implications and also the expense ratio is quite high. And one of the major cons is potential over diversification, because you could be investing in same stocks through different mutual funds. Well, that is all for today. Stay tuned to ET Markets for more.